Hey listeners, I interviewed Emon Motamedi, head of the Solana Incubator, for this episode. The Incubator is run by Solana Labs, which was the organization that first developed Solana a few years ago, but now it's focusing on developing Solana companies. The Incubator just finished a cohort focused on real-world adoption, and it's beginning its third cohort of Solana startups soon. We talk about Emon's approach to startup building, how he encourages fresh ideas, and some of the interesting startups to come from the Incubator so far. Let's get into it. We're coming up on Permissionless 4, happening June 24th to 26th in Brooklyn, New York. It's the premier conference for crypto builders. Whether you're building on Solana, trading in the trenches, or just curious about DeFi, you won't want to miss it. Mert and I will also both be there. We'll be hosting a Lightspeed pod meetup at a bar, and I'd love to meet some of you in person. Ticket prices will go up, so snag yours early and use the code Lightspeed10 to get 10% off at checkout. Nothing said on Lightspeed is a recommendation to buy or sell any investments or products. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely their opinions, not financial advice or necessarily the views of Blockworks. Our hosts, guests, and the Blockworks team may hold positions in the companies, funds, or projects discussed. Hello and welcome back to another episode of Lightspeed. I'm your host, Jack Kubanek, joined today in the studio by Emon Motamedi, the head of Solana Incubator. Emon, thanks for joining me.
Yeah, of course. Thanks for having me again.
Yeah, so Solana Labs runs this Solana Incubator program. It's now about to kick off. Well, I guess applications are about to finish for your third cohort. The second cohort just finished. There's some really interesting startups coming out of that. But it's just fun to have you on, Emon, to talk startups, get some of your thinking on what you're seeing being really close to a lot of these teams that are trying to build new things on Solana. I think Incubator 2 was real world adoption focused. So maybe some of the some very interesting use cases coming out of this incubator just from conversations I've had with the team and all of that. So that's the big goal for today. But I want to start. This is the first podcast I've recorded since Accelerate. So you have the lovely honor of being able to have post Accelerate takes with me today, Emon. So congratulations.
Awesome.
You were not prepped for this at all. But first, major US based conference that Solana has hosted. What were the vibes? What were the takeaways for you?
I think it was great. I'm actually curious what your experience was, but I think the Solana Foundation team did such an amazing job. With this one, our thought was now is really the moment to push within America from a regulatory standpoint, from a maturity of ecosystem standpoint. We just launched the Solana Policy Institute as well. And our goal is to kind of dive deeper with our roots in the DC area too. And so all of these different trends were sort of coming together and led us to say, hey, let's make a big push within the US. Let's have a breakpoint style conference, here and really sort of celebrate the ecosystem here, but almost from a day zero perspective of, hey, we know you all have been building, but really the sky is the limit for what we can accomplish within the US. And I think we delivered on that. Scalar Die, obviously the first 2 days was amazing. We had all the devs in one place talking about the interesting developments and whatnot. And then Ship or Die Thursday or Friday was really fun to be a part of as well, where one big portion of it was the policy side of things, where we had Congress people coming in and sort of presenting on what they're excited about from a crypto perspective. We had a ton of, Web 2 folks in the ecosystem, VCs, crypto, curious people in the ecosystem, kind of showing them what's possible from a real world adoption perspective. And then obviously it's always so fun to have the whole ecosystem in one room. I feel like anytime you'd walk around the conference, you'd run into someone you haven't caught up with in a while. So, I thought it was phenomenal and I really enjoyed it.
Yeah, I thought it was a well-done conference as well. No one's paying me to say this. It's my genuine take. It was just, well-run, very kind of high signal, good content. I liked the East and West Coast stage. One was more like TradFi suits, and the other was more consumer, Zora and so forth. I don't know why I use Zora to define that whole one. That's the only speech I caught on the West stage. But I think my overall take was, or the feeling I had, and I plug for the Lightspeed newsletter. We have a newsletter that goes along with this show, comes out daily, has some insights from yours truly, so go subscribe to it. But I wrote in the Lightspeed newsletter that there was this real feeling that change was in the air. I think that I've been writing that newsletter for about a year, and I was just reflecting on how much that formerly felt like conventional wisdom or common knowledge has changed. There's more competition than there has been before in a lot of sectors on Solana. I think like Alpenglow, which at some point we'll dig more into what that is, but this change to the core Solana consensus protocol was really interesting because it always felt like Firedancer was, this future thing that was talked about in almost religious terms, and now here we are updating the Agave client, and like now Anza's the hot cool client developer or whatever. This is no shade to Firedancer. It feels like conventional wisdom is shifting in a couple ways. The Kraken tokenized equities announcement was really interesting. The Trump meme coin dinner happened during the conference, which created some interesting conversations. So yeah, I think in general, Solana is more competitive than ever before. A lot of our assumptions, I think, are starting to shift as well, is the takeaway I had.
Yeah, I think that's right. And I think it just speaks to the sort of pace of development within crypto, but also Solana at large. And I like your framing of it, of a lot of the things that we thought were sort of core assumptions have changed and rather quickly. And I think that's the sign of a really vibrant ecosystem when tons of people are coming in, they have new perspectives on things, they build things in different ways, and suddenly the world looks very, very different than it looked 3 months ago, 6 months ago, et cetera.
Yeah, exactly. And it's tough out there. Like there's no free lunch anymore. I think that you think of teams like Jupiter that in the aggregator space operated really without a credible competitor for a long time, and now everyone and their mother wants to launch like a Solana aggregator. Jupiter announced a lending product. So now Camino, which was the borrow lend on Solana, has a credible competitor. And there's other lenders too. But it just feels like it's no longer the case that it's like, okay, you have Solana and then you have the Solana lending protocol, the Solana aggregator. All sorts of teams want to get in on this really hot blockchain of the moment. So.
And I think it's going to force innovation as well, where if you look at the first few years of the ecosystem, there was just so much low hanging fruit that we didn't have, whether it's building the first lending protocol, whether it's building the first sort of swap protocol, whatever it is, we just needed stuff built. And so a team could go build that thing and kind of have a big share of the market around that thing. Whereas now, because a lot of the like sort of low hanging fruit elements have been built, it sort of forces innovation in terms of, okay, what are the new problems that people aren't thinking about, and what can you build around? It's almost, I think of it as like an iPhone analogy, where once you've built the calculator app, once you've built the first like video app, it's like, okay, what else is possible? And that opens up room for, I don't know, the Snapchats of the world, the Ubers of the world, whatever else.
Oh, and yeah, which reminds me, big Solana mobile announcement too. That was really interesting. I know. So like Solana Incubator sits under Solana Labs, which was formerly the entity that like developed Solana. Now it's sort of develops startups, including, I think the Incubator sits under them. Do you work with Solana Mobile at all? Are you going to accept a phone developer?
Yeah, so I'm really close with that team, and a lot of exciting developments coming out of Solana Mobile at Accelerate as well, to your point. And yeah, we're definitely excited about all things mobile too. There's actually a question on the Incubator application of, hey, are you building an app that could be interesting from a Solana mobile perspective? Would you want to sort of go deeper with that team as well? And so very open for folks who are thinking in a mobile native way. And then Nikita Beer also came on as an advisor for Solana Foundation, Solana Labs. He obviously is one of the best sort of mobile consumer minds as well. We were lucky enough to bring him in to Cohort 2 to meet with some of the teams there, and he was super valuable and helpful to them. And so also thinking about for Cohort 3, if we do bring in a mobile team, if we bring in Nikita again, I think that could be a really interesting synergy too.
I remember you had a tweet a while ago that was like a team was meeting with Nikita and said that it like completely changed the way I think about go to market or something like that. What was the general vibe of having him around? Like what kinds of ideas did he bring that maybe weren't around before?
Yeah. I think and I wasn't in the meeting with the teams, so take this with a grain of salt, but I think he kind of gives teams permission to think about like what it would look like to go 100x, 1000x from where their existing thinking is. Meaning, when you're in the weeds building your startup, it's so easy to kind of get pigeonholed into the way that you're approaching things, maybe the way that you think about, risk reward is through a more conservative lens where it's like, hey, if we just add on this feature, maybe we can increase our metrics 10%, 20%. And I think what he sort of encouraged the teams to think about was taking the big swings. And so he would get into the weeds with the teams around what they were building, understand kind of their go-to-market strategy. And I think very quickly be like, hey, here are ways that you can sort of 10x the way you're going about this, and take a much bigger swing than how you're approaching this today. So once again, I wasn't in the room, but sort of the vibes I heard from the teams afterwards were based around this principle.
Gotcha. Interesting. Yeah. He had an interesting call recently because I remember seeing a tweet from him about Believe. That if you're familiar with this, it's this sort of meme coin launch pad for startups that Ben Pasternak is this Zoomer founder. It was formerly called Clout, kind of in the SocialFi space. We did a pod about it a couple weeks ago, but it's for a moment was like really challenging pump fun and meme coin volume. And Nikita tweeted like a couple weeks before it really became big on Twitter or whatever, and was like, okay, because it has this mechanism where you tweet a coin, this is like inherently going to go viral or something like that. And then I don't know what kind of voodoo magic was going on, but yeah, then it became huge like 2 weeks later. So the guy knows what he's talking about. We'll have to get him on the show.
It really is the viral mechanisms that are so important, especially when you're building sort of a mass market consumer product. Having the right hooks in place really can make all the difference. And that I think Believe's mechanism was really interesting. It sort of reminds me of even way back in the day with email, right? Certain email clients would have you whenever you'd email someone, there'd be like a little footer that would say like sent from hotmail.com, for instance. And so if you're able to find sort of those viral growth moments that are part of the UX flow of your product, it can go such a long way.
Today's episode is brought to you by Ledger. Ledger is a secure hardware wallet for your SOL and logins, trusted by 7 million users, and securing 20% of the world's digital assets. It's built a robust ecosystem of products and services, making digital ownership more secure and accessible to everyone. Ledger's newest devices, Ledger Stacks and Ledger Flex, feature the world's first secure touchscreens, making it easier and safer to manage your Solana transactions and assets. With Ledger Live, you can seamlessly manage and stake your SOL and now your SPL tokens, all while staying secure. From Bonk and Pengu to Jupe and Ray, 130 SPL tokens in total can now be bought, managed, and swapped on the go via providers like MoonPay and Exodus from the security of the Ledger ecosystem. As always, investments in blockchain technology involve risk. Terms and conditions apply. Do your own research. One thing I wanted to ask you about, Emon, is ideas. Generally, I think that maybe centered around virality and also this Believe app phenomenon recently. Something I've thought about is just that in crypto, a lot of ideas can feel very derivative quite often. So some new piece of tech or some new vehicle for speculation will come out, and then you see like a million of the most obvious ways to apply it. So like AI agents are one example. There was one interesting AI agent experiment with Goat or whatever, and then there were like a million AI agent launch pads that all came out, and a lot of them are no longer seeing much activity. So in your role running this incubator, how do you encourage teams to maybe think beyond the most obvious applications or the most obvious ideas that other teams are trying? Or is there wisdom to doing that maybe because you know there's a market for it? Like, I guess just this is like a vague question, but how do you think about ideas?
Yeah, so idea generation is funnily enough something I've thought a lot about, and a lot of the teams that come into the incubator already have kind of their idea fleshed out. A lot of it at that point is, okay, how do we find product market fit around that idea, and if we can't, what does it look like to pivot to something else? But when we talk about, hey, how do you come up with an idea for a startup to begin with? I think there's sort of two paths to go down. The traditional YC path, which I think is the right path, is like build something you yourself want, right? And if you are already very crypto native, if you're in a bunch of discords, if you're, using a bunch of these protocols, I think it becomes much, much easier to see kind of what are the needs that aren't being met by the market today. Oftentimes I think what certain founders struggle with is they sort of come into the ecosystem from outside. They're like, hey, I want to build something in crypto. Maybe spend, a few days researching different things, choose something to build. But at that point, you don't really potentially know enough and have enough experience to build something for yourself because you haven't been like the core user in the space for long enough. So I really do think that like build something you yourself would want to use is fantastic advice. YC has a ton out there that covers that piece. When I was starting my company prior to joining Solana, me and my co-founder left our jobs. I was working at Reddit at the time, and we left without an idea. And we batted around a lot of things in the vein of, you know, build something you yourselves want. Couldn't really find something that we were that excited about and found that compelling. And we were sort of at this stage where we were each day kind of trying to brainstorm ideas, but struggling to come up with anything. And then I met with Roger Dickey. He's the former founder of Gigster, which was a sort of gig economy platform back in the day. And he actually had a really amazing framework to go about coming up with startup ideas and coming up with a lot of startup ideas. And so I'm happy to walk through that if you think it'd be relevant. Yeah. So there were sort of two paths in his approach. The first was using certain heuristics or themes to come up with ideas. So what does that mean? So examples of different themes were like 7 deadly sins, stages of a relationship, kind of paths in the educational system. And I'll explain what that means in a second. And for each of these themes, me and my co-founder separately would sort of brainstorm ideas around that theme. We'd, you know, spend, let's say 5 minutes on a theme, coming up with a bunch of ideas. Then we'd come back together, share what the ideas were. And often in the sharing process of that, you'd kind of come up with like, you know, you'd pair one of his ideas with one of my ideas. You come up with a net new idea. And so what do I mean by these themes? So let's use, 7 deadly sins as an example. For each of the 7 deadly sins, we would say, okay, one of the 7 deadly sins is gluttony. What are different startup ideas around the realm of gluttony? And we would each separately brainstorm, come back together. Same with envy, same with pride. It makes you think about, different sectors that you might not otherwise be thinking about. Another example is like the stages of a relationship. So, when you're dating someone for the first time, what are some ideas in that scene? When you sort of enter the like honeymoon period, when you go to get married, maybe when you get divorced, what are different ideas? So, it sort of puts you into these different sort of chapters for each of these themes, coming up with ideas for them. But by far and away, the best thing we did was the second path, which is, what I think about as the sort of graph or the vector way of doing it, which is you imagine an x-axis and a y-axis. Not even imagine, you build this chart with an x-axis and a y-axis. And on the y-axis, you have different tech trends. So maybe you have on there AI, VR, AR, maybe you have some of the developments in Solana ecosystem or in crypto on the technological side, bunch of different tech trends. And then on the x-axis, you have different industries. So maybe you have travel, dating, personal finance, et cetera. You write out all of the industries that you're interested in. And then for every node in this graph, you spend, let's say 5 minutes, brainstorming all of the ideas you can think of at the intersection of these two. So let's just use, travel and VR, for instance. And so one dumb idea at the intersection of those two might be, hey, there's a family in Kansas City. They really want to go to Paris, but they can't afford to travel to Paris. And so maybe we build a VR experience that lets them have kind of the touristy lens of what it's like to be in Paris. And you basically come up with, for each of these nodes, you come up with, I don't know, 10 or 20 ideas like that kind of the intersection of the tech trend plus the industry make you think of. And so me and my co-founder, through both of these approaches, we ended up with something like 3,000 different ideas, which is a ton. And it's very evident kind of quickly what the dumb ideas are versus the good ideas. But the point of this is really to like yes and all of the ideas when you're in the brainstorming to see kind of what new idea can drive from that. And then I think we got to like our top 100. Got to our top 25 eventually. And then for the top 25, we did a bunch of customer interviews, chatting with experts, and we ended up writing like 1-pagers, which were really like 3 or 4 pagers, diligencing each of those ideas until finally ending up with the idea we pursued.
To bring this back to crypto too, I think one of the hurdles maybe is they say like crypto is capitalism on 2x speed or whatever. In the crypto world, you could have a huge, very lucrative, call it narrative around startups that lasts for like 3 months, and then no one's interested in it down the line, say like restaking or something, to use an example. So, and like when you attach tokens to these things, there are actual like venture outcomes to just capitalizing on an idea, coming up with a super uninteresting but of the moment kind of idea, and then shipping it. So like, how do you balance that with the startups you're working with, where crypto just moves so much more quickly than maybe the traditional VC world?
Yeah, I think despite crypto moving so quickly, I at least try my best to not be too trend focused, because kind of implicitly in what you're saying is what I've seen at least is that a lot of these like flash in the pan trends that people capitalize on, the companies kind of maybe they launch, they're very successful for a short period of time, and then sort of the trend passes and the company ends up, not being as successful. It doesn't sort of sustain the level of growth that it had. And one of my like principles is, and this doesn't always hold true, but it works a lot of the time, which is, the quicker something grows, the quicker something falls. And a lot of the companies that we look at as successful companies on Solana today, the majority of them are folks who have been building in the ecosystem for years at this point and have sort of gone through the iteration process to get to where they are today. And so a lot of my lens with the incubator specifically, but I think, founders broadly it would be good to sort of think about this is, what are the teams that are actually building to sustain, that have a long-term vision, that aren't just capitalizing on a trend that's in market. And it's fine to capitalize on a trend if you really believe in the whatever that trend is, and you think that it brings a lot of value to the ecosystem. 100%, build around that thing, but also think about the sort of business fundamentals around that thing of, if a lot of interest in this thing goes away, if VCs aren't funding this thing anymore, how do you sustain the business? You sustain it through revenues, you sustain it through profitability. And that's a lot of what we talk to our incubator teams about as well. Is, originally when even we started this incubator, for me, the big thing was like, hey, let's bring real sustainable businesses to Solana that aren't only reliant on a lot of eyeballs or a lot of VC funding or token go up, that are actually working to drive revenues, on-chain revenues, ideally profitability, et cetera, to sustain themselves as a business. And I think a lot of founders would do well to sort of remember those traditional business fundamentals on top of, the crypto and the trends and everything else.
Yeah, it's I feel like Mert talks about this a fair bit on the show. Like the incentive structure in crypto is so skewed, and it really is like a temptation when that you could, create like an AI wrapper around Pump Fund and make a AI agent launchpad or whatever, and make a bunch of money like very quickly. And maybe you're like 22 years old and that could be life-changing money for you, but these things also go downhill. And so it's admirable, I guess, that you're trying to build with these teams. Maybe I'll pivot into a question on that then. There's like an adage in the industry that the two things that have PMF are speculation and stablecoins. And as I look at some of the startups that have come through the Solana incubator, there's one stablecoin, I guess, this most recent round that was interesting. But for the most part, there's not really a lot of speculation. There's not really meme coin stuff, and there's not a lot of stablecoins. So how do you think about advising teams on how to find PMF when maybe they would be the first crypto startup in that field to ever have found PMF?
So I think maybe the distinction or the delineation I would make is between ideas that are built specifically for the crypto audience versus ideas that are using crypto as infrastructure, but aren't specifically for the crypto audience. And that delineation, like a lot of the crypto specific ideas that are out there, I think a lot of them are sort of speculation based, and a lot of those folks have been successful. But if you look at crypto as just infrastructure that is supporting some broader idea, then I think the adage of, the two things that have PMF or stablecoins or speculation doesn't really hold true as much, because viewed through the perspective of infrastructure, viewed through the perspective of, Solana is akin to a startup deciding to use AWS as their backend, let's just say. then that startup could be out doing sort of anything. And the Web3 portion of it is kind of just in the background. And I think we saw that with this past cohort, where we were really focused on real world use cases for this cohort, which is use cases that kind of aren't expressively for the crypto audience specifically. And because of that, you have startups tackling a lot of different verticals, and verticals often that their core competition isn't other Web3 companies, but it's actually Web2 companies. And so that's where I think you're able to see examples of companies going out and tackling things where a lot of other companies have gotten PMF around that thing that they're tackling. It's not a crypto specific thing, but maybe crypto opens up better ways to solve that problem for the end user.
I know there's also, I forget who said this, but basically like startup founders will sometimes think about, oh, hey, there's this existing market and I'm going to go win this existing market, versus it can actually be a better move to say, we're creating an entirely new market, or we're going to take this small market and make it much bigger with our product. How do you talk to some of these founders that are building in, admittedly, like a tricky space, like actually trying to do real things in the real world is tough? How do you advise them on like finding their market and then trying to sell into it?
Yeah, I think it's less. This is where I think focus on what the end problem is really important, because, you know, if you look at Airbnb, what I'd be willing to bet, and I think this is the case, is that they weren't sitting there and saying, hey, the market for non-hotel rentals is going to like explode and it doesn't exist today, but we're going to like create that market. Maybe implicitly in the back of their heads, they thought that, but they were really like, hey, I would love to be able to go to a new city and crash on someone's couch. And I can't do that today. And that was the problem they were trying to solve. And in the process of solving that problem, they kind of backed into this much bigger opportunity. And so I personally try not to think too much about sort of market sizing dynamics and growth rates of markets. The one lens that I will say that I think is important for founders to talk about is it does help to be entering into a big market, because what that means is, like, if you spend a ton of time thinking about one specific problem for this market, but for some reason you can't find PMF around that problem, there are probably a lot of adjacent problems that you can pivot into in that market. Whereas if you're in a much smaller market or a non-existent market, let's use the Airbnb example. Let's say the founders of Airbnb found that actually people don't want to stay at these sort of couch type things, and they don't want to stay at people's houses. Let's assume a world where actually people's inherent desire was to stay at a hotel. Then if they found this couch thing wasn't really working, it's kind of hard to pivot from there. You know, the spectrum of ideas that you could pivot into is probably smaller than if you were in a market that's very large. So that's the one exception I'd make to what I'm saying is, you know, from a pivot iteration perspective, it helps to be in a larger market. But generally speaking, you know, if you have conviction in the problem you're solving, there's enough human beings in the world to believe that, you know, other people probably have that problem as well. And I actually think that's why like things like the internet or Twitter work so well in the sense that prior to sort of the ubiquity of everyone having a voice and being able to post things online, there were much more clearly delineated sort of societal figures, the original influencers, if you will, where it was a much smaller pool of people and people kind of listened to what they were saying and were excited about what they were saying. What the internet has sort of proven is that we all have our own different interests and niches and ways that make us different from other people. But our little sort of slivers of things that we're interested in, there's probably a good chunk of the world that's also interested in that thing as well. But it's a small chunk of the world, but that small chunk of the world is enough for a TikToker to make a channel around that specific thing, or someone on Instagram or on Twitter to speak to that specific thing, and they'll be able to drive enough of a following around that specific thing. And I think the same applies to startups as well, where even if you think your own idea is the most small thing, no one else has this problem, why would I go and build this? The reality is probably many people have that problem solely by virtue of you yourself having that problem.
Today's episode is brought to you by Ledger. Ledger is a secure hardware wallet for your SOL and logins, trusted by 7 million users, and securing 20% of the world's digital assets. It's built a robust ecosystem of products and services, making digital ownership more secure and accessible to everyone. Ledger's newest devices, Ledger Stacks and Ledger Flex, feature the world's first secure touchscreens, making it easier and safer to manage your Solana transactions and assets. With Ledger Live, you can seamlessly manage and stake your SOL and now your SPL tokens, all while staying secure. From Bonk and Pengu to Jupe and Ray, 130 SPL tokens in total can now be bought, managed, and swapped on the go via providers like MoonPay and Exodus from the security of the Ledger ecosystem. As always, investments in blockchain technology involve risk. Terms and conditions apply. Do your own research. So one consideration for crypto startups is the token. In traditional crypto venture, especially with how few exit opportunities there have been in the history of crypto so far, the token can be a real thing that drives returns for investors and for founders too. And there can be some negative outcomes of that, obviously, and some temptation to, create a ton of wealth out of thin air, basically. But I'm just curious how you advise founders on tokens. You've mentioned that a lot of the teams you're working with are maybe focusing on a non-crypto native audience, but maybe they still want to have a token to bootstrap the network or something like this. So when you're talking to founders, how do you think about tokens with them?
Yeah, so I think there's sort of two types of conversations that I see founders having around tokens. One type, and you see a lot of this on Twitter, is sort of a founder wants to launch a token because they see that as the sort of monetary exit of their project. The token will always be linked directly to the project. And in a lot of ways, this sort of token becomes the project itself.
Yeah.
Another path is the token is embedded into the project and it's fueling some sort of incentive structure for that project. It's said differently. It's actually solving a tangible problem that project has. And I think that second route is the much more advantageous route to go down from a company building perspective, where if you see a real problem that a token could be solving in terms of whether it's setting up the right incentive structure or doing something else, then by all means leverage a token to do that. And I think we're definitely supportive of that. But if it's just like, hey, let's launch a token go up, let's pump the token, that I think we have a much harder time with. And I think founders, that's more the story that, like we were talking earlier, it's less about building a sustainable business and it's more just, number go up really quickly. And so, yeah, using the token in support of a sustainable business, I think is really the key piece. And the framing of using it to solve a problem that you wouldn't otherwise be able to solve without the token is important.
Do you have thoughts, I don't know if you do, but on this, the Believe app, which is basically saying, like, if you're a founder and you have an idea, you can launch a meme coin and see if the market sort of values it, and then whether to like create your project or not. How do you think about that as a go-to-market strategy? Because there's obvious potential downsides to this, but it's also like Ryan Connor from our research team and I did an episode where he's very bullish on this as a way to kind of incentivize smaller apps or something like this.
Yeah, I guess I'm of two minds on it. On one side, I think it's a super interesting experiment, and they definitely should be trying it. And I'm curious to see, if we do see sort of amazing companies built through that model. I think that would be really exciting. I think the pieces that I not even struggle with slightly, but the pieces that come to my mind around that model are one, you kind of want your founder to have founder market fit around whatever the idea is that they're building in a way that like they so deeply understand the problem that they don't need to crowdsource to the masses to say, hey, is this a problem worth me going out and solving? Maybe that changes things though. Maybe suddenly they find, hey, actually, I don't need to have founder market fit. If the market is telling me that this idea is lucrative and attractive to go build, maybe I should go build. So that's piece one. And then I think piece two is sort of the Steve Jobs piece around like users don't always know what they want. And yes. So I don't know that I would necessarily trust the wisdom of the masses to say, hey, yes, this is absolutely the thing that's needed. We actually saw this. So when I first started Solana Labs, I was running Realms SPL governance, which was our DAO platform. And we had like a DAO grants program where both we would sort of get feedback from the ecosystem broadly around what should we go out and build, and then more specifically we'd work with some of the core builders on what some of the like technological constraints were that we need to build around. And oftentimes what we found was the wisdom of the crowd, wasn't quite right. And often the wisdom of the crowd was solving for a different problem we had, meaning the crowd would come in and say, hey, we would love to have this feature enabled. And what we'd realize is actually that feature is enabled, and it's a fault of ours that we haven't communicated in that in the right way, or maybe it's buried in the UX flow or something else. And so sort of a random example, but all that is to say that there's only so much trust I would place in the wisdom of the crowds around what you're building. But I could also see examples where that wisdom would be good to follow. So I'm enjoying being on the sidelines and seeing where they go from here.
I guess let's touch then, because you mentioned there's kind of a breakdown between, are you trying to sell to a crypto native audience, which is a real market, although maybe one with a more limited upside, just because it's capped by size. And then you have, let's just make something in a very big market and then we can pivot and all these things. Cohort 2 was very focused on that latter category of like real world adoption. You've talked about this, I think, in your Accelerate talk. What were the learnings from the real world adoption? Why did you decide to make that the theme? I'm also curious if that'll be the focus of Cohort 3, this new one you're about to close.
Yeah, great questions. So for us in starting Cohort 2, we were at a point where, from a regulatory perspective, things were looking much brighter, especially in the US. From sort of an ecosystem maturity perspective and technological maturity perspective, we felt like now was the time to really push real world use cases. That's always been the promise of cryptos. How are we going to impact individual people's lives? And I think a lot of people get jaded from the outside looking into the ecosystem because they're like, oh, this all looks like speculation to
or
me.
From the inside.
Or even from the inside.
Yeah.
Exactly. And so we expressly decided to focus the cohort on real world use cases and support teams that were trying to drive those use cases. The way things shook out is we ended up with sort of 3 different buckets of focuses, if you will, of these 6 teams. One was on the institutional finance and real world asset side. One was on the sort of data and machine learning side, and then one was on the payments and stablecoin side. So happy to go into any of those. And you asked kind of the learnings in the process. I mean, what we found is now really is the time, in the sense that I think it was a good bet to make to focus on this use case. On the institutional side, the institutions are here. They're excited. We had a ton of them come in to the incubator, meet with a lot of these teams. On the data and ML side, I think those teams are driving sort of real use cases that are nascent and actually driving revenue in within those use cases, which is great. And then on the payments and stablecoin side, those 2 teams look very different in what they're trying to tackle, but both are kind of just hitting their stride and getting a lot of traction around what they're building. And I think that's probably the biggest difference as well that we're seeing is kind of all 6 of these teams at this stage are sort of crushing it. They're kind of in this peak moment where they're growing quickly. They're raising funding. And so there seems to be a lot of appetite as well around these teams that are focused on real world adoption. That's not to say that the Solana specific stuff, isn't good. I think it's wonderful. We had a ton of those teams in Cohort 1. We probably will in Cohort 3 as well. With Cohort 3, we haven't expressly said, hey, this is the focus of the cohort. We're kind of waiting to see what sort of teams end up applying and what their focus areas are. But in terms of Cohort 2, I think it was a really great experience to get to focus on the real world use cases. And then the other thing that resulted from that was there was a ton of synergies between these teams, meaning it was very easy to customize the folks we were bringing in to meet with these teams, because a lot of teams wanted to meet with the same sort of, whether it's institutions, same subject matter experts, et cetera. There's a lot of cross-pollination between teams in terms of ways teams can work together. In that room, we had the folks at Alpha Ledger who've been in PIMCO 20 plus years. We had Hadley Stern that started Fidelity's digital asset group. And so just a ton of subject matter experts, even within the cohort. And that obviously allows folks to help each other, build alongside one another, et cetera.
Okay, interesting. Hear me out. 7 deadly sins cohort. Cohort 3. I got some greed ones you're gonna love. No, that's interesting though. I see you started this project, under an unfriendly Biden SEC. We now are under a friendlier Trump appointed SEC. I'm just curious if there's been a shift in like the things you're able to encourage founders to do, or like the ways you're encouraging them to think about going out and building their crypto startup.
I think the biggest difference is probably a geographic difference in the sense that with cohort one, there was I don't want to say there was a fear, but I think it was much harder for US based teams, cohort one. And you see that in the makeup of the cohort, where for cohort one, 4 of the 6 teams came internationally. 2 of the teams were based in the US. 1.5 even was based in the US. And that also changes the makeup of kind of what these teams are tackling by virtue of kind of where they're based and the geography they're located. Whereas cohort 2 was sort of the inverse of that, where I think 5 of them were based in the US, 1 came internationally. And I think there's a few different pieces there that result from that. One is that, people now feel more comfortable driving products for end consumers that are in at least in the US, but probably more broadly as well. That the use cases that people are able to go after are probably more I don't want to say more traditional use cases, but it's moving slightly less away from the solely crypto native use cases, more toward the real world use cases, which is great to see. And then 2, I think like there's sort of a diversity of thought now that can exist a little bit more from the standpoint of you're bringing in founders from different backgrounds. Some founders within the US, some founders like the Alpha Ledger guys that I was just mentioning that have the PIMCO experience. Across maybe some team from Asia who has really institutional experience coming from the Asian markets. And so the cross-pollination of those 2, I think is really interesting and wouldn't have happened before. And then the final one that I wanted to touch on was, from an institutional side, I think institutions, Web2 companies, other folks are much more willing to lean in now as well, where in the past, maybe they were a little bit hesitant of what was going on from a political perspective. Now I think they feel a little bit ready and willing to lean in. So it's been great to see the trends there across the board.
Yeah. I mean, I think one of the, let's say like smarter critiques of the former SEC's approach to crypto is it encouraged some of this negative short-term thinking that we're talking about and discouraged real world use cases, because why would I try to build out a real business that's going to take years to kind of develop and might fail in the end if I know that the SEC might sue me out of existence halfway through it, when I could just, launch this very short-term oriented kind of the token is the product scam and then sell it to US users who have VPNs. Like the incentives are pretty perverse. And I think one of the pledges that a lot of crypto people made, maybe to the public in the US too, with this changing regulatory approach to crypto, is we're going to show that there's real use cases here. Like we're going to we have these next however many years that the SEC is friendly to crypto to show that like this is actually beneficial to people and it's not just vaporware and scams and so forth. So it's cool to see that that focus is emerging, at least out of your incubator.
Yeah, I think it's exactly right. It's a great point on sort of the long-term focus piece. It both allows companies to be much more long-term focused. And I think some of the narrative around like, what if Solana disappears tomorrow? What does that mean for my company? Would I lose that key infrastructure? I think that was, that fear obviously partially was a technological fear, but partially also was a regulatory fear as well with crypto overall. And I think that fear has dissipated as well in a lot of ways.
Totally. There's also this Solana Policy Institute, which we talked about. It was interesting at Accelerate. Like this is the first time you kind of saw them out and about, but Kristen Smith, who's the president, I guess, was around at places. Miller, the CEO, was around as well. Do these teams have like access to them for regulatory support, things like that?
Yeah, actually Miller came in and spoke to the cohort, which was great. And I think what they're trying to do with the Solana Policy Institute is really help Solana companies have a voice in Washington, especially those that feel like they're running into regulatory roadblocks. The core purpose of the institute is to help remove those roadblocks and accelerate the progress of these teams. And so yeah, Miller was really gracious with his time to come in, kind of speak with the cohort, then paired off one-on-one with some of the teams that focus was more relevant to. So yeah, very excited to see what's going to come from SPI.
Totally. Okay, so cohort 2, they're kind of finished with the accelerator now. You did an accelerate talk where you give like a brief, maybe like sentence long summary for each of them. So I just pulled out the couple that caught my eye. The first one is you mentioned this stablecoin payments flow startup Easy has found a client base in elementary school lunches, which I thought was interesting. So I'm curious to hear the story of that.
Yeah, so they're an amazing team. I think what they're trying to solve is driving down the cost of payment processing fees for merchants. And a lot of folks have tried to solve this problem in Web3, and the challenge they run into is oftentimes the solutions are, okay, hey, as the merchant, you're going to accept a stablecoin based payment. It means that the consumer needs to have some sort of a Web3 wallet that they can use to pay for the thing. And so you need sort of adoption on both sides of the table, which is really hard to get, especially on the consumer side. Easy looked at this challenge a completely different way, which they said, hey, what if we allow consumers to still pay with the same credit cards they're paying today? Is there anything else we can do to solve this challenge? And the answer they came to was yes, which is let people pay with the same credit card they're paying with today. Let that end merchant receive their working capital, their proceeds from that payment in the same 7 days or whatever it is. But maybe in that 7-day time frame, when the transaction goes through, let's take that payment, let's immediately put it on stablecoin rails. Let's put it in some yield generating safe asset within Web3. And then let's pass back that yield to the end merchant so that they can use the yield to offset the 3% or whatever it is in payment processing fees that they're going to have to pay on that transaction. And the merchant still gets paid out their working capital at the end of the day. And so what's great about this is they're basically, for both sides, the consumer and the merchant, they're existing in the same sort of steps that they have to do today, meaning they're not changing anything in the flow for the consumer. For the merchant, basically the flow is the same, with the benefit of payment processing fees being lowered. And so obviously when you go to a merchant and you say, hey, we want to reduce your payment processing fees, there's very little you have to change on your end to enable this. That's a great value proposition. And the way they talk about it was like, what's the hardest space we can go and sort of validate this strategy in? They're like, maybe school lunches is the space. And so they went out, they got adoption in a bunch of school lunches, and school lunch programs, and have since now started expanding verticals from there.
Why school lunches? That just feels so random to me.
I think one of the first few people that was really interested in this was a person that helped that dealt with merchant payments at a number of different schools. And I think I may be telling this story wrong, but I think she was really excited about what they were building and said, hey, I think a lot of schools would really appreciate this. And also the other thing with school lunches, maybe more pertinent to school lunches, is that with payment processing fees, there's two different sides of fee, meaning there's a sort of set fee on the price of the transaction. But if the transaction is very low in cost, there's sort of a fixed fee that isn't percentage based. So to give an example here, like let's say you're paying for something that's $30, maybe there you get the variable fee of 2%. So what you end up paying is lower. But let's say you're paying for something that's $1, that might trigger the fixed fee where it's just, hey, you have to pay a 70-cent fee minimum for any credit card transaction. And so what Easy's doing is really relevant, especially for lower ticket item purchases, because the end percent fee that the merchant pays is much higher. For a $1 transaction, if it's a 70-cent fee, they're paying 70 70% in transaction fees. And so with school lunches, they tend to be lower ticket item type purchases, whether it's something at the vending machine or even the lunch for the day that you're paying for. And so then then savings that accrue to that merchant are much greater in that context.
That's so interesting. My kid's lunch money is going to 50x hyperliquid perps. No.
Exactly. No.
That's really interesting.
Yeah.
Are they do they have plans like what's the adjacent market to school lunches that you then expand into?
So we worked with them a lot on their sort of go-to-market strategy around going out to more enterprise customers, and they've grown their pipeline. I think the way they talk about it is they've grown from, I think, what was $25 million in potential pipeline volume pre-programmed to now, I think it's $1.5 billion. And so they're getting demand from all different sorts of industries. I think for a while they were thinking through, do we go and capture another vertical, maybe adjacent to school lunches? But now they're in a place of kind of sifting through that demand and have some really interesting merchants that potentially want to use this. So I don't know if it's going to be another very clear vertical like school lunches, or if it's going to be a bunch of different bespoke merchants that are driving a lot of volume.
Gotcha. And then the other one I wanted to ask about was USDM1, which when you first announced the cohort was still building in stealth, I'm guessing for some like a trickier regulatory situation to deal with, maybe, where it's like a sovereign stablecoin in the Marshall Islands. So what's their story?
Yeah, so I think what they're doing is really interesting, which is they've sort of realized that having sovereign status as a stablecoin carries with it a lot of regulatory advantages that everyday stablecoins might not be able to have. For instance, I think they're the first nettable stablecoin under under ISDA, which carries a lot of advantages for institutions, for traders, et cetera. But on top of that, I think the Marshall Islands, and I don't want to speak for the Marshall Islands, but I think different governments throughout time have seen, hey, having a stablecoin infrastructure within our economy can be really beneficial. Can it make things like issuing UBI to our populace more efficient, more advantageous? And so I think there's also a really interesting use case within the local economy of the Marshall Islands and bringing forward this stablecoin to support the country.
I think there was a period in time when every entity wanted to announce a stablecoin. So like the state of Nebraska, I think, has a forthcoming stablecoin. Does this have potential expansion capabilities to other jurisdictions or U.S. states or whatever?
Yeah, I think that's where, at least from my perspective, I was most excited, in that they really want this and believe this to be a global stablecoin because of the sovereign status and the regulatory advantages that come from that. There's a ton of different implications for different parts of the chain, whether it's institutions, whether it's individual holders of the stablecoin. It is a yield-bearing stablecoin, which is amazing, but specifically the sovereign status carries with it a ton of benefits that I think allows this to be a pretty massive global opportunity.
Interesting. Is it difficult to underwrite some of these stablecoin startups or payment startups? Like, I know that it can just be tricky to monetize those kinds of things, especially when, I mean, in stablecoins, like the players are so entrenched in payments. Sometimes you could think like that kind of thing goes, or it becomes a loss leader for a different business in the long run or something like that. So, how did you think about kind of investing in those two specifically? Yeah,
I think from my standpoint, the way that we think about different teams' applications, regardless of industry, is one, do we really believe in the team? And then two, do we see a very high ceiling, a really huge opportunity for what they're going after? And for both of these two, the teams were incredible. We thought, hey, this is the team to really bring this to market. They have the subject matter expertise to go after this. And then from an opportunity size perspective, obviously starting a startup is a low probability type thing that you're doing. But for both of them, we said, hey, if this is successful, this has like massive ramifications across the board. And so even if it is in a space that's maybe more competitive or in a space that traditionally teams haven't had a lot of success, if this is the team to do it, if we can support them to doing it, and if it has a massive outcome on the other side of it, it's worth us to lean in.
Yeah, as you alluded to, like most startups fail. I'm curious if you have an internal or like internal to your own head target of how many of these Solana incubator projects do you actually expect to like find PMF and become sustainable businesses?
I don't know that I have a specific percentage. I think for me, the way that I try to run the program is kind of trying to do what's best for the founder as well. It's not just driving the best outcome of the company. Obviously, that's a really important piece of it. But in cohort 1, for example, we had a company that had tried a bunch of different things. It was clear that the founders' hearts weren't in it anymore and that they wanted to go on and do other things. And oftentimes it can be helpful to just kind of give them permission to do that, right? If they're bashing their head against the wall, if we know, hey, the next thing they're going to build is actually their life's work, and and the pivots they're doing in this thing aren't really working for them, I think that's okay too. And so it's less about, hey, having 80% of the cohort be successful, and it's more about doing the right things by the founders, because at the end of the day, we started this program to drive the ecosystem forward, right? And so obviously there is some financial motivation there, but a large part of the motivation is to help expand the Solana ecosystem. And so for that founder, if they could be doing much more fulfilling work for themselves, much more impactful work for the ecosystem, then I think it's okay to give them permission to kind of move on from that idea and onto something else.
I think where I'll close is just talk about cohort 3 a little bit. I think that when this comes out, this will be the last day of applications. So get on it quickly, folks, if you're listening. I guess, what are the details? How do people apply for the new cohort?
Yeah, and so maybe if I could give a quick sort of background on what the program is for folks who are unfamiliar. Yeah. So the Solana Incubator program is, as Jack mentioned earlier, Solana Labs built a lot of the original products and protocols of the network. We built the original validator client. But as the network has grown, as all of these amazing developers have come in, we've now asked ourselves, hey, what is the best way to scale the knowledge and expertise we've built up across the ecosystem? And the incubator was one of the answers to that question, where we bring in 4 to 6 teams to our New York office for 3 months at a time and really build alongside them to help create the next blue chip company on Solana. The reason we keep the program so small is that we really want to customize to the needs of these teams, where, we have all the traditional YC type elements like, office hours, workshops, speakers coming in, dinners, etc. But really at its core, the sort of biggest benefit of the program is the build alongside Solana Labs experience, where, 1 week a team might come in and say, hey, we're trying to build out our user experience design. And that day we'll have a meeting set up with our head of design at Solana Labs. Maybe the next day he's jumping into the Figma to leave comments on the design. Another week it might be figuring out go-to-market. We'll get the head of marketing in the room. We'll figure out how to execute on that strategy. And so we really sort of customize the week-to-week or even the day-to-day experience for each team based on what are the roadblocks they're facing, and how we can help accelerate their progress. And yeah, that's why we keep the cohort size so small. And we also, even for cohort 2, I think I alluded to this, but we ran a survey prior to the program for everyone in cohort 2 to understand, hey, who would be the most impactful folks for us to even bring in for you to meet with? And so it's not this cookie cutter where we're having the same office hours and workshops. It's, hey, who should we be bringing in to help support you? And then I think the final piece that's really impactful of this is being in the same room as some of the best builders in the ecosystem. So both within the cohort, the cross cohort synergies that arise, being in the same building as, Solana Labs Foundation Onza, in the same building as teams like Drift, Tiplink, Artemis, etc. You're kind of in the nexus of the Solana ecosystem. You get to know and build relationships, friendships with a lot of the major players. So really trying to hit on a number of different pieces for these founders that sign up. And yeah, to Jack's point, cohort 3 kicks off, or the application deadline is May 30th. So probably today, if you're listening to this. And then the cohort kicks off beginning of September. Will run from early September to late November out of our New York offices. And so there's an application on our website, solanaincubator.com. Feel free to go check that out. I'm also on Twitter at Emon Motamedi. If you have any questions, feel free to reach out.
Great. Well, Emon, good luck with cohort 3, and thank you so much for coming on the pod.
Yeah, of course. Thank you for having me, Jack, and thank you again for being the first podcast I've been on 3 times.
Heck yeah. Thank you everyone for listening. That is all we have for today. Please like this podcast, give it a 5-star review wherever you get your podcast fix. Thank you so much for taking the time. If you enjoyed this episode, please share it with a friend, and we will see you again very soon.